So banks are officially getting greedy, and they want this. They want the money that you owe them. Now, we are seeing that banks are going after the American people. We are now seeing foreclosures are increasing. Even repossessions are starting to rise. Many people are losing their possessions simply because they don't have the money to continue making payments. I warned you about this over the past couple of years. Now, we're starting to see it come around where banks are taking back homes and vehicles. Now, I'm going to break all this down in just a minute. I'm going to give you some very interesting stories. I have the 3 stories here that people have sent me. I want to read all 3 of these because this is very telling as to what we are seeing moving forward. So, all I ask is one thing. Takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now, let's begin. So banks are just like everybody else. They want their money. They loaned you the money to buy a car. They loaned you the money to buy a home. They want it back. They want you to continue making payments. Now, look at this right here. It says car repossession surge by 23%. This is at the end of October. We are seeing repossessions are surging all over the place. Now, I want to read you a little bit of this article right here. Look at this. It says in 2024, car repossessions have risen by 23%, reflecting the growing financial pressures that many Americans are facing. According to the report by Cox Automotive from July 2024, the spike represents a 14% increase from pre-pandemic levels in 2019. The sharp rise in repossessions unrelated to vehicle mechanical issues underscores the challenges customers face in staying current on their auto loan payments amidst rising interest rates in an unstable economy. Now, here's what you need to keep in mind. Interest rates are high, but also the cost of owning a vehicle has just ballooned. It's going through the roof. Look at this right here. It says the average car payments for 2024. Drivers' average car payments top $730 and $520 for new and used vehicles. It says auto loan debt hit $1.64 trillion, which makes up more than 9% of all household debt. It goes on to say, and again, this is troubling, on top of that, delinquencies have increased, and serious delinquencies of 90 days or more have gone up from 2.53% in 2023 to 2.9% in 2024. Granted, that's not a huge increase, but that is just serious delinquencies of 90 days or more. Yeah, that's a problem. Now, I want to read this comment. This person wrote to me, and they wrote this comment. And this comment right here, well, this is something that I know far too well. Okay, I had a lot of friends that did this years ago. Let me read this to you. This person wrote to me and says, and I quote, Adam, my wife and I love the videos, so keep it up. I want to share some unfortunate news though. My wife and I pay north of $1,300 a month for our cars, and for the past 5 months, we have been unable to cover one payment. Says they are $850 and $465 a month, respectively. We got an adjustable rate mortgage back in 2019 at 4.15%, but now it's adjusting to over 7%. Even with the pay down of our home, it's not enough to make a dent in our monthly debt. I know there's nothing that we can do right now, but I just want to warn people that do get adjustable rate mortgages. The bank never tells you what is going to happen years down the road, as they likely don't know. And that is where they got us. We are likely going to lose at least one car, if not both, and in order to just keep the house. Yeah, here's the issue. Okay, there is adjustable rate mortgages, and I'm not going to get into that, but it sounds like this person, if they bought it in 2019, that would have been 5 years ago, so they probably got a 5-to-1 adjustable rate mortgage, which means you lock in the rate for 5 years, and then it adjusts, and so if it's a 5-to-1, the 1 is every single year after that, it is going to adjust. Those are tough to get into, especially when you don't know what interest rates are going to be. Back then, at 4.15%, that would have been perfect to get in as a 30-year fixed rate mortgage, but they didn't. They got an adjustable rate. So they likely screwed themselves over moving forward. But that's what we're facing. Many people didn't know what's going to happen. And here's the other concern, is adjustable rate mortgages started coming back, especially in 2000, it's probably like 2015, 16, 17, around there. And some people get like a 10-to-1, which means 10 years of a fixed rate at whatever it was, and then 1 year it keeps adjusting after that. So that would be due in the next 1, 2, or 3 years. And then we could really be in trouble. But look at this right here. This article says the FHFA says it prevented 43,000 foreclosures in Q3 of 2024, but new cases rose by 27%. Yeah, the Federal Housing Finance Agency, did prevent a good number of foreclosures, and again, this is troubling because we're not going to see all these preventions happen in 2025. Okay, I just want to be very clear on that. The federal government's not going to step in. We're not going to see this extension, this moratorium just continue to go. Right? Eventually, people have to pay, because if they don't, banks are going to suffer. Banks will shut down, and eventually the federal government will have to step in and stop banks from collapsing, which would likely cause a bank run. And at that point, who knows what happens. Now, I want to read you something else as well. Okay? First off, let me show you this, though. 70% of homeowners with adjustable rate mortgages regret it. Okay? And I want to show you that because it's a great way to get into a home, but if you can't adjust and you can't refinance at a better rate, at a fixed rate, you could screw yourself over for the length of the loan. Okay? Many people that I know that have got ARMs, okay, adjustable rate mortgages, they normally regret it, but many of them, especially over the past 10 years, have actually lost their homes. So don't be one of those people. Now, I want to read you this story as well. Listen to this. This person wrote to me and said this, and I quote, "You have been warning us for the past couple of years to be wary of banks, but I didn't listen. I thought I knew better and went and bought my wife her dream car. We traded in my truck, and I bought her a 2022 Range Rover. Payments after the trade were only $900 a month, which I thought was more than doable." First off, $900 a month is crazy. But for a 2022 Range Rover, I guess they bought it, probably within the past couple years, still pretty expensive. However, $900 a month was only possible when I was working. I lost my job back in June, and I have yet to find anything. Here in Texas, we have 26 weeks of unemployment, which was up last week. So, you can see my worry now. How do I tell my wife we can't afford her dream car? Will the bank really come and repo it if we don't pay? Let's be very clear. First off, $900 a month is a very expensive car payment. Very expensive. Now, it's nothing compared to like a Lamborghini or a Ferrari or something like that, or a Bentley, but it's still $900. You could use that somewhere else. Especially if you don't have a job, $900 is a massive payment. Person says, how do I tell my wife we can't afford her dream car? Well, you got to be honest with her. You have to be honest with your spouse. Let them know, hey, we're struggling here. If your wife knows you haven't been working since June, obviously that's troublesome. She probably realizes, yes, we only have one income. Or maybe she's working 2 jobs. I don't know. That's an issue. Will the bank really come and repo it if we don't pay? Yes. Banks are absolutely coming and repossessing cars. Listen to this story, because this is going to be very telling as to what we're going to see moving forward. This person wrote to me and says, I work for a small bank here in Temecula, and I can tell you that nobody will get through this unscathed. At the beginning of November, I got the pleasure to deliver the unwelcoming news to my coworker that our bank had to repossess her car if she didn't come up with the back payments. Her partner hadn't been working since the beginning of summer, so that obviously hurt them. And since I delivered the news then, she was unable to work at the bank after having a car repossessed. Yeah. So even a bank employee who obviously understands banking, understands the repossession process, understands you have to make payments, couldn't make the payments. And as a result, her coworker had to tell her that they were taking her car. Since then, she can't work at a bank. That is the issue, okay? Like I said, it doesn't matter. When the person asks, will the bank really come and repo it if we don't pay? Yes, absolutely. The bank does not care who it is. They don't care what troubles you're having. They don't care if you just had a child, there was a death in the family, that you lost your job. The bank wants their money, okay? If you're not going to come to the bank and deliver some money, they don't want anything to do with you. That's the issue, and that's the reality of the situation we are currently in. Now, we have a couple more days before we get to January 1st, 2025. My belief is that starting probably in February and March of 2025, we are going to see repossessions are going to rise. Foreclosures are going to rise. We're going to see banks start cutting back on credit card debt, where they aren't going to allow you a $10,000, $20,000 limit. They'll probably cut that to about 50%. That's what we're about to see. So just keep in mind, banks are trying to minimize their risk, and as a result, they're taking back cars, homes, lowering your credit limits, and doing everything possible to ensure that they are getting all of their money. So just keep that in mind as we move into 2025, but that is what we know as of today. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.